How to maximize gains in the Forex market, part 1, understanding when your system performs best. And that is exactly what we're going to be talking about in this YouTube video. You know, we constantly get questions all the time asking, why is my system performing better here than last month or the month before that? Or why through all this back testing have I now started in the live markets and my system is completely going against me? Now sometimes, majority of the time I will tend to look at the psychological side of the trader and see, what way is their current mindset when it comes to managing money, managing risk, how they see the market, their beliefs, and are they kind of working through the market from a probability standpoint? But sometimes what it will come down to is a technical issue, and this is an example of a common technical issue that I see all of the time. But also one that you may not actually know that you have it right now, or you may not know how to leverage on this opportunity. But that's exactly what we're going to be explaining in this video at the moment. What I want you to understand is that market phases are essential. And I'm not just talking about knowing what a trending or ranging market is. I'm talking about truly understanding why your system performs better in some market phases over another. And then understanding by that when to turn the gear up and when to turn it down on how aggressive you can be in the market. Be precise. A lack of precision is dangerous when the margin of error is small. And that's exactly what we're looking for. We're looking for precision here. We're looking to be precise. And by analyzing the market phases and when our system performs best, it allows us to do that. Now, have you ever experienced these problems before? Have you ever wondered why your strategy performs better some weeks over others? You can continue to follow your plan, but it seems like the odds are just completely against you. Well, the solution is identifying your correct market phase. Now, obviously, it's not just a quick fix, one fits all. There will at times be different problems to why you're actually losing in consistently. But what we're talking about right now is the market phase and how to actually understand in the first place if this is your current problem. Now, a lot of the time I see traders just thinking that, okay, I have a set strategy, and they'll come to the market, they'll have their few instruments that they trade, and they'll just open up their charts and say, what opportunities are available to me today? They'll just open up the charts, no planning behind it, and we actually have a video coming out on planning as well, but absolutely no planning behind this, and they just expect to find a setup there and then. Not zooming out, not looking at what the market is actually doing, is it ranging, consolidating, trending, whatever it may be. Shifting. No one's actually looking, and this is a huge problem, because if you're just arriving to your desk on a day-to-day basis and just opening up your charts, it's kind of telling me that you don't know when your system performs at its best, and you don't know when it performs at its worst. And it's very important to understand your strategy's weak points and strong points as well. So, from a basic technical point of view, you understand that there is, two main types of market phases. Okay, we have trending and ranging. Very, pretty much easy to actually be able to identify from a visual point of view. Although I do recommend looking at it from an actual systemized approach as well, to make sure that we're not forcing that, because sometimes our eye will tend to force what we see and force what we want to see on the charts rather than what's actually happening. So having a systemized approach is a good way of identifying that. But as you can see here, ranging, pretty standard here. We're working basically within inside this range. And trending, we can see here we're working inside this channel, or we're working this trend here. We've a series of lower highs and lower lows, and we're continuing the momentum is continuing in this downwards momentum, or the trend is continuing to the downside very clearly, with what characteristics? Aggressive pullbacks of at least 60 to 70%. And yeah, this is just basic characteristics of your common trend. Okay, but what I would like to say to you is, you just look at the market, and I'll even see people do analysis and they'll say, oh, the market's ranging. But then they just go on and tackle and just basically execute on the market like it's no different to a trending market, when it's completely different. And even just looking from left to right here at the characteristics are completely different. The way you trade it is completely different. You know, someone who's looking for aggressive pullbacks here, for example, the trader who's trading supply and demand is going to perform a lot better and maximize their gains in a market like this, rather than trying to maximize it in the choppy conditions here, which, yes, they may get some opportunities within here, but their ideal trading scenarios are here. Look at the difference. Here we've choppiness. We're coming back into the level before moving up further. Here we have that one touch. It's easy to identify when you're in the correct move because it'll tend to move quick and fast away from that supply or demand level. And it will usually head to the low in a trending market to signify either to take your first profits or that your move is over. You know, the credentials that we can put when we understand the market phase is a lot clearer to optimize. When we come into a ranging market, you know, we're not going to use a system that is primarily focused around a trending market and a ranging market. It doesn't make sense because the characteristics are different. So, you know, for your support and resistance traders, it's much easier to view the market like a range and then trade within that range. And that's exactly where, in my opinion, the support and resistance trading concepts in general perform at their best, when we're looking at ranges in general and focusing around utilizing the high or low of those ranges. So, you know, when we compare those phases, it can be very simple to do so. So I believe that when you're looking at the markets, the first thing you should be doing is, are we in the correct phase for me to trade this particular instrument? And this is what you'll often hear traders talk about, how they will scan through the markets and see where their best opportunities are going to be fit. And this is exactly what they're doing. They're seeing what markets or what instruments or assets are currently in the ideal market phase for me to trade. So we're going to go through the characteristics and show different examples, and that might give you a better understanding of what I'm talking about here. But when it comes to comparing phases, a simple 21 moving average, 50 moving average can be your ideal scenario here to actually look for when you're trading or when your market phase, you know, when the instrument is in that current market phase. So we can see here trending and we can see here ranging, and you can look at the difference. A 21 and 50 EMA are crossing over at least 2-3 times here, identifying that we're in a range. Very tight behavior from that moving average as well, and you know, giving us the ideal scenario or conditions then to trade from the high or low of that range. Okay, maximizing the gains out of that opportunity. While in this case we can see that there is gaps here, okay, almost looking like a fan-like structure where they're moving beside each other like this. Market, it tends to come into these areas before rejecting up further, but either way, by scanning your eye over, you can see, yes, we are clearly in a trending market, and that trending market is moving to the upside. Okay, so we'll go into exactly why this is important again now in a minute, but once you're able to use a systemized approach, it makes it a lot easier than trying to force your eye like here and saying, are we trending, or, you know, are we ranging here, you know, or etc, or are we ranging here, you know. But with a systemized approach, it eliminates all that second guessing and tells you exactly what the market is doing, where and when. Now, when we just look at the trending characteristics, think about what we usually have. We have some sort of aggressive pullbacks, where we can use, you know, things like fibs or moving averages, fib extensions. This is where they will perform at their best. Consolidations that line up with trading sentiment, which we'll talk about in a moment as well. We have build-ups combined with supply and demand methods, which we'll also talk about in a moment, okay? But these are the usual characteristics that we have when it comes to trending markets that allow us to profit on. And let's just kind of jump into this straight away. So first of all, what we have is aggressive pullbacks, okay? Think about this. The supply and demand trader, if you actually draw out your dry on your charts, your supply and demand levels, and zoom out for a minute and just write down the characteristics of that trade, not drawing these breaks of structure and everything else, just the characteristics of what the market phase, so what this is doing on a day-to-day basis when you are at your optimum level, when you are winning the most. And I guarantee you that majority of the time you're going to be in some sort of trending market and that you're milking that trend on the way up or down. And this is the first characteristic that I'm talking about, aggressive pullbacks, because the supply and demand trader will usually look for, without even realizing, aggressive pullbacks of at least 60 to 70%. And you can see that here. Here we go again. Here, tapping into this area here, we can see even this correction here, moving down further here, and we're continuing to trade in this direction, moving down here. And some people will say, well, this doesn't really matter. Identifying the market phase for supply and demand, these particular trading patterns or concepts, they're absolutely everywhere. I can trade just movement. Well, my way of trading is that I focus around the playbook setups, that I understand what I want to trade, when I want to trade it. And because I'm so clear on when my system performs best, I'm able to leverage a lot more on those opportunities with a lot more confidence behind me, rather than the trader who doesn't understand when their system performs best or worst, depending on that market phase. And I believe that's where different types of trading strengths come into play, that I understand my trading concepts on a much more deeper level. And that's what I'm trying to do here. That would you trade, look at this, look how easy it is to trade off these supply and demand levels or patterns or whatever you want to call them. Look at how well they trade here compared to when we add in a ranging system, which we'll discuss in a moment. They aren't as clean. The market isn't moving as quickly as way. So your signs or your margin of error in this case, okay, is a lot larger, because what you're looking at here is that the market is coming up, tapping and moving away very quickly. That's the common characteristics behind that setup when we trade supply and demand methods, that that you're right fairly quickly instead of when you're in a range. In a range, the way you trade this completely changes, because now we're tapping in maybe a few times, and now what's happening is the trader who was trading with these market conditions here but didn't understand how to identify the market phase has now come into a market phase that is ranging, trading the same concepts, and can't explain why the market is hanging around their entry, shaking them out because they don't lack the same confidence anymore. They're now having to survive these open drawdown levels, and they're not used to it, because this is how they usually trade, where the market is moving swiftly and quickly away from their levels rather than hanging around it. And that alone, understanding that alone, is going to give you a serious amount of confidence that even if you want to trade the two market phases, at least you know that when you're trading this market phase over this market phase, you're going to expect a lot more choppiness within that trade, allowing you to execute with confidence or hold the trade with confidence once again. Next, we have the consolidations combined with trading sentiment. So what you'll notice is when we have a strong trending market, there are opportunities where we have explosive movements to the upside. Now, you can take the trading sentiment from multiple platforms online. Standard one, I'm fairly sure, is the daily FX sentiment. A lot of prime market terminal traders will tend to use their sentiment from their software as well. Really, you can just look this up online and you'll find the sentiment, which basically is telling us where the majority of traders are. And if the majority of traders, if 90% of traders are losing, it is good practice to do the opposite of that. But a brilliant way to use trading sentiment is when we're actually in a trending market. And this is a particular strategy that I have where I tend to look for these explosive movements in strong trends. And what I want to see is, I want to see a trending market, and I want to see the market put in a high, come up to test it again, and come up to test it again, and it can come to test it a fourth time if it really wants. But what's happening is we tend to start messing around this area of resistance. And for me, this is when an explosive movement is going to happen. What I'm looking for here is then I'm looking for I'm looking for the trading sentiment to increase in the opposite direction. I'm looking for the majority of the retail to be looking for short, while I'm looking for an explosive movement to the upside, causing movements like this. Now, why does this matter when it comes to market phases? Because if I'm looking for particular breakouts, okay, my job as a trader is to look at when are these breakout strategies performing at their best. And for me, I find that my breakout strategies are performing on an intraday perspective, coming into consolidation from a previous daily candle, which I'll explain later throughout this video. But when it comes to a trending strategy or a trending market, what I'm looking for when it comes to these explosive movements or breakouts is exactly this. I'm looking for a strong trend to come into play. I'm looking for this consolidation period at the area of resistance or support, whatever it may be, and a break then above that high from a 4-hour or 1-hour perspective to look for that push up higher with plenty of clean movement here to the left hand side for that movement. So what I'm doing is I'm maximizing the potential here of this trade. I'm maximizing the odds of success by looking at where are these systems performing best. Majority of you are looking at a breakout here like this, and then only getting movements like this before the market's coming back in and then moving away. But what it's doing is it's stopping you out. Or what the market is doing is here, you know, we're getting consolidation like this, and then we break up higher, and then it comes down to tap you out before then moving up higher again. What I'm doing is I'm looking for these movements that move very, very quickly and very, very fast. So it's actually limiting the amount of drawdown that I need to experience. It's maximizing the gains. It's allowing me to execute and manage that trade with a lot more confidence, meaning that the probability of success on my end now is probably going to increase as well. But I do this by understanding the phase we're in and then what I should be looking for from that phase. So there's no second guessing of what I need to do here or what I should be looking for. So that's the whole point here. So here's another, common trend trading characteristic of a trending market, and how you can capitalize on that. The next I like to look for is build-ups. I don't trade with these supply and demand order block concepts. I trade this slightly different, but this is a common trending market characteristic where your supply and demand traders have your supply pattern in place, and what you'll see is where these big movements take place, we usually have some sort of build-up, and that build-up includes a small microstructure trend within there that is very, very clear to the eye. And for me, if I see it, you see it, and if it's too clear or stands out too evident to me that this trend, how clean it is, and the pullbacks, I'm genuinely going to be looking for where is this top going to be put in place and look for a confirmation of that for me to look for a move to the downside. But once again, I know exactly what I'm looking for now because I understand the market phase and its characteristics. Next, let's look at the ranging characteristics. We have support and resistance, which you can obviously trade with this trending market as well. I'm not saying that. You can do this. There's support there. Resistance now turns support. Resistance now turns support. Of course, you can do that. But even with that, what way are we viewing the market? We're viewing it as a range. Okay? We're viewing it still as a range within here, within that trending macro structure. We're viewing as minor structure ranges. But when it comes to just ranging characteristics in general, your best bet here is going to be your support and resistance combined with the higher low of that range. Breakouts combined with specific times, which we're going to discuss as well, like I said about the intraday, and fakeouts that cause shifting behavior in the market. So what I want you to look at here is support and resistance, the trading concepts themselves, extremely simple. Majority don't believe it anymore because we have this smart money concept bullshit that people think they're trading like the banks. I'm not saying that it doesn't work. I'm just saying the emphasis that you're trading like a bank is just, the emphasis that they put on that, the weight that they put on that, how to trade like the banks, is complete bullshit. And you're basically insulting your intelligence. You're showing your lack of knowledge of how the foreign exchange market actually works. So that's where my problem for SMC comes into play. But when we're talking about market phases, again, when it comes to ranges, this is where your support and resistance concepts are going to maximize their gains completely. This is where they perform at their best. Okay, it's not like, for example, you can try use a Fibonacci level within here, but you're trading within these boundaries, and it just becomes so hard to actually identify where should I be entering, which actual pullback should I be looking at, where should I be drawing my fib from. It's a lot easier to identify the high or low of this range and trade from that high or low using simple support and resistance concepts. And this is what I'm talking about. A lot of people will say that it doesn't work. What I'll be saying to you is, do you know actually how to trade it? And this is when I say you probably haven't mastered the basics, because you do not understand in the first place where you should be maximizing your gains with these concepts and when you shouldn't be trending them at all. Think about it. A market that's doing this. We see a lot of markets like this over the last week or two. A market that's doing this. Are you going to be trading when the support level is here? Are you going to be trading these, looking for a pullback from here? Are you going to be trading these support and resistance concepts in a market like this? No, you're not. Okay, you're not. You're going to be maximizing on the gains on these pullbacks. You're going to be using much more aggressive strategies that are fueled by that trend itself. But are you going to be trading a market like this like you would here? No, you're not. And this is my exact point, that you have different trading styles and different trading strategies for different market phases. And that is exactly what I'm trying to talk about here. That you can see here by drawing 3 support or resistance lines. You can see here, here, and here. You can see how we can just maximize the complete gains around this area. So if you want to trade, or if you wish to trade like this and develop a system around this, all you're looking for is, how do I identify ranges like this before they are finished, and how can I maximize my opportunities around that? And then you know exactly what you're looking for in the markets, allowing you to execute with more confidence, because you're not second guessing anymore. You have a systemized way of viewing when the market is coming into a market phase like this, and you're going to maximize the gains until we break out of that. Now, this is when it comes to ranging periods, but combining it then with breakout strategies. A lot of the time, people will have been taught that the simple breakout strategies identify the range and look for the breakout. But what we'll tend to have is some sort of breakout or a fake out, let's say, and the market will just completely go against them in the opposite direction. But I genuinely believe this is down to not truly understanding when these breakouts are taking, when the highest probability breakouts are taking place and what characteristics they have themselves. And that's what I mean when you look at this here. We're coming in from previous days, so this is the daily separator here, intraday time frame, 15-minute time frame, 5-minute time frame. We're coming in, we're carrying that range from the previous day into where the New York Open, where we're experiencing a lot of volume. The build up here is huge, as we've been building up from the previous day. And we have created these boundaries for ourselves to trade within, which you could trade on a micro time frame if you really wanted to, but it's not necessary. And then we have coming into New York Open, where we're seeing this engulfing candle. We're seeing it off this area of support here. We're seeing this kind of larger pin bar. We could set a limit order here to catch that New York volume on either side of the low or high. And then we're looking for that market to move very, very quickly away after this build up. We're looking for basically a vertical move. And that is going to be a lot more, there's a higher probability chance of that happening at times like this, with these characteristics combined with specific times, rather than just picking a range like this and buying on the first candle close during the quietest times of the day and then expecting volume to come into play. That's not how the market's going to work. That's not, going to happen on a day-to-day basis. If you're trying to look at this from a probability point of view, you're much better looking at where is the most volume in the market, then looking at how to identify those ranges like this, and then how do I profit from them. And once again, this comes from identifying the market phase. I can look at this on an intraday time frame and say, okay, we're in a range today. Okay, let me get my trading plan out on how to trade ranges. Okay, how am I going to trade this from an intraday time frame? Well, if I'm trading a breakout from an intraday time frame, or if I'm trading a range, let's start like this. If I'm trading a range from an intraday time frame, what I want to first of all do is identify that high and low. Then I want to see, is the range itself big enough to be trading from the higher low using kind of a support and resistance methods. In this case, no, it's a very tight buildup. Okay, what's my next plan? Well, my next plan when it comes to breakouts on an intraday time frame is I have to look for a high volume time, and then I need to look for a clear entry signal with limit orders set to the high or the low, preferably with the overall dominant trend on the 1 hour or daily chart. Okay, now I can see my signal. We're coming into that high volume time. This makes sense to enter now. See the way there's no second guessing here. I don't need to push and be like, is this the top of my range? Is this the bottom of my range? Or how am I going to trade this? What should I be waiting for a break here? No, I know exactly how I'm going to trade it every single time because I'm aware of the market phase. And this itself comes from collecting databases. Then we have fakeouts, shifting behavior, I like to call it. Shifting behavior where you're looking for to break the low and then take from the high. And you'll sometimes see people on Instagram or whatever it may be, they're probably fake, but what you'll notice about them is that when they're trading these markets where they catch the low and then they catch the high, and they're basically trading from up here all the way down here, what they don't realize that this in itself is a market phase, and these opportunities come within certain market phases. Now, let's just say you traded from support and resistance itself, okay? Just a simple concept. You understanding when these phases occur is going to give you a much higher probability of maximizing your gains in the market, because let's say if you took a sell or a long position from here, as you start seeing that change in structure coming into play where we may be consolidating or a reversal may be coming into play, if you understand what market phase this takes place in, you're going to be able to execute now back down to this level with a lot more confidence, or at least down to 50% of that level. But either way, you're going to be able to catch that reversal with a lot more confidence because you understand what market phase we need to be in for this to happen. Typical market phase for shifting behavior to happen is that we have an inside bar from a previous day, and then we're working within that higher low, and we'll shift below, and then we'll work up to the high as well before then shifting down lower. This is the most common place for this to actually or times for this to actually happen. This inside bar, I view it as a market phase itself, as we're trapped within the higher low and working within it, almost viewing it like a larger range, and then we see the break below, break above, and this will tend to happen in very high volume times, New York Open, London Open, etc. But to end this presentation, what I'm trying to say to you guys here is that if you truly understand your system and truly understand your strategy, you'll understand when it performs best. You won't just arrive to the desk and presume that there is candles on the chart that are just going to line up to your system. Or you're not just going to arrive to the chart and go, okay, let me do my analysis and mark up all this beautiful art on your chart. Think about it. That makes absolutely no sense. And now when you think on a deeper level and look at this, how every single system here, although we might be trading within the trending market, there is even different characteristics within that trending market that allow me to maximize gains. When we look at moves like this, people will say, oh, these only come every now and then. But I'm guarantee you, go look at the trending market. Look at when we're repeatedly tapping and then causing a build-up. You will see these very high volume movements coming into play over and over and over again. Now combine that with cut report, seasonal data, whatever it may be, you have even better, a better combination again. You know, the same with this. You know, oh, support and resistance just stops me out. Well, maybe you're not trading the correct market phase. Is this what's happening? Is the market coming up and then we'll put an area of resistance in play and then comes back up here? So let me just, yeah, so the market, and you have a resistance and then you want to sell from here, but fail to look to the left hand side and see that we are actually in a market phase where we are trending, and then we break up and come back inside before moving up higher, and then you say, oh, this is manipulation. No, it's not. The market just put in that next higher high, part of the higher time frame, lower time frame, whatever it may be, but that market phase, it's just putting in that higher high from the trending market before the pullback, where you say, oh, that's the move I was looking for, and then we actually move up higher again. No, you're not looking at what market phase that you're in, and then you're not strategically putting yourself in the position for the best odds of success. This is how you maximize gains. You understand when your system performs best. This allows you to, you know, maximize on these opportunities when you're in the correct market phase, and then come back a little bit and be less aggressive when you know your system isn't going to perform best. It doesn't mean that you need 400 types of trading styles or different systems. You only need one. But how you maximize the gains on that single strategy is understanding when your system performs best and what market conditions you need to maximize those gains or be a lot more aggressive. So on that note, we're going to finish how to maximize gains part 1 here on the CQR FX channel. If you liked this video, will you please leave a like below, please subscribe to the channel, and comment below any other video recommendations you'd like.